You're you're definitely right. Do you think, let's say you're an investor in America in the stock market, how how intrigued are you about other economies and their stock market, or how, or should you just be laser focused on America's market or the market you're in?
That's a great question. You see me smiling. I feel like I kind of broke a code because the other markets they opened up before us. So the Asian market and the European market. The European market I think works opens up at 3 a.m. New York time. So when you watch someone of that market, our market kind of seems to follow the Asian and the European market. So I
Mm,
feel like I almost cracked the code with that one. Like, because like I'll see it 3, 4 in the morning, then I'll text some of my buddies like the stock market's gonna do this today. A lot of times I'll be right, but I'm just basing it off of stock futures and what's going on with the opening of their market. Because it's 9 o'clock there, so they're new. The stories that we're not getting until like maybe 9, 10 o'clock in the morning here, those stories are already on Bloomberg TV at 3 a.m. because they're
right.
covering and as it opens, they're covering the stories that we're not gonna get till 9 a.m. here. So yeah,
Mm,
I mean, I like to
mm,
watch futures. I like to watch European markets, Asian markets and see
yeah.
just going up or down and see how the major indexes are moving there.
See, that's smart. That's why I asked. I knew there was something. I knew there was something to it, because if you need to forecast what your market's going to do, you have to have a reference point to other things. So looking out at the Asian, the European markets, those are good tactics to do. So I think if you find a way to simplify it a little bit for you, because I think people might get intimidated a little bit by looking at an index, or a CNBC. How do you think you should start? What's a good way to start, even once you invested and you bought the Apple, you bought your
That's
one
a
share?
great question because CNBC, the lingo they use is crazy. So what I did like the first 6 months, I just watched CNBC all day, every day, until I kind of got some of the lingo,
Right.
because they really talk like real specific.
It's like
So you
learning another language almost.
exactly,
Right.
yeah, yeah, you have the language they speak, but it feels good like when you start learning it, like it's like yeah, I know something now that I didn't know before. It's like
Yeah.
breaking like a cryptic language. You know what I'm saying? Like
Now that makes sense.
it's pretty because once you learn that like you have a different type of economical out you have different economical knowledge and different economical power, and most people don't take the time to understand what they're saying. So once you power yourself with something like that, you understand like enough of the stock market. I mean, that's an education that you can if you go to school, college, you can only learn so much. You have to actually buy stocks to really learn. You have to understand how to read resistance, support, things on charts and things like that. Just small
Right.
things. They're not really that hard to learn, but you learn those over time, day after day, month after month, year after
Right.
year. You educate yourself. It's like an ongoing process.
No, I think it's funny how we talk about the swimming. You could read a lot of books about how to swim, but you
Hmm.
gotta jump in to swim. You gotta like jump in to swim, to feel the temperature of the water, see how it feels to be in it. That's sort of what it is with investing in the market. I think at first people tend to use it almost like a bank sometimes, and it's not
Hmm.
really made to do that. It's not made to like try to come in and get a high dividend or a high investment rate and try to just double up or whatever on your money. I think it's really for a long term. I think it's more of it's definitely a long term option, and you have to sort of ride the ups, the downs. It could crash where you totally just lose it all, quote unquote. But those usually cause rises too at the end. If you just stay in, it'll come back up, and that's when riches are made. So I think it's important to know. I think it's important to know.
Very important. That's why the two of the greatest investors, Warren Buffett and Charlie Munger, in their conferences, they always say, if you treat the stock market like a gambler, you're gonna get results like a gambler.
Right.
People they don't know nothing. They want to put all this money when the stock's already at its height. Then they lose $7,000 overnight. You can't jump in like you said. It takes time. You have to research. You have to. Charlie Munger and Warren Buffett, they don't even sell. They don't trade at all. They buy and hold for years, decades. That's how you
Right.
really well. Me
Right.
personally, I like that type of investing too.
long term, like invest and stick with it. Me too. Try not to sell unless it's last resort. You might have to sometime, but you get savvier as you're in it.
Exactly. You get to my point. You get savvy as you go along. That's why I think you have to invest. You can't jump in and day trade. There's no way you're gonna know. I would invest for like 4 or 5 years and learn really how the market moves. Maybe see 20 earnings seasons, 4 earnings seasons a year. See 20 earnings season, which is like what 4 or 5 years, and then you can start trade. You have to know what's going on. You have to
Right.
educate yourself before you trade.
Right. Right. No, that's 100%. That's 100% true.